Good morning, good morning, good morning, everybody. Say goodbye to June. It is the final day of June. Because it is late, I didn't get a weekend update out, only because the weather did not allow me to, and I am getting my first typhoon of the year, and it is going into July 4 week anyway, and there are bigger, better opportunities to discuss the first half of the year next week. So I give you a quick intro into this week as futures are up. Futures are up. The Dow is up 0.5%, as well as the Nasdaq almost over on the S&P at plus 24 points. And here's the Russell 2000 pushing back to that 2200 level, also up 0.5%. But what does it mean? Well, first means where did you come from to get here? Back on March 14th, well prior to the lows being put in, new all-time highs are coming. Went through a very detailed explanation in that 45-minute weekend video about how we would get back to new all-time highs. Back on May 21, discussed with you the Wave 4 drop zone targets, and as well, the same highlight that we have been talking about for the better part of 5 years. Weeks, not years. 5 weeks. I'm talking about years on other stuff. Da-da-da-da-da-da-da-da, all the way down, and everything producing for you there as it has been unchanged. Nothing has changed. Went into June 13th, CPI week, with the market makers, the bullish FOMO, the China deal, all talking about how we were getting up there, 6,982, topping watch reach, watching for the top, looking for that wave 3 top. It worked. What didn't work was we didn't get a deep wave 4 as we went into global thermonuclear war. And our bottom placed right there on that Monday open. So as I shared with you when on Friday, because that 59.43.23 bottom there on Monday after the U.S. went and bombed Iran, bottomed at 59.43, didn't get all the way down to 59.20, 59.10, and we've been dipless, all the way dipless. Plus 6.5% over there as we were going into Friday, a little bit more on Friday, as like I shared, the steps to get up higher and where they are, 61.82, 61.88, 68. Well, we got that first step. 62.06.36 is getting stepped on today. And the ideal, 62.45.37 for the A, shallow B, C equals A off the Iran bombing at 59.43.23 low on Monday. There you have it. It's all sitting there, ready to be done. And this is 4th of July week. And one of the things that I do want to bring into your memory, for those of you who have never experienced it before, that 23 minutes minus 20% back on April 7th, and I think we spent a couple of minutes there on April 10th or April 11th. It was 33 days to get that drop. 33 days to get minus 20%. Took 95 days back in 2022 to get that. It only took 15 days on COVID to get the minus 20% level. Yeah, we went further, both in 2022 and in 2020, but it's just a point of how long it took for that day. That 33 points down, you see that 15 points down, the miraculous move took place off of that. Come back over here onto, not there, I have it somewhere. Where are you? I know I have you up here. Son of a bitch, I didn't put it up here. I have it. Let me find it. Hold on, hang on. So we're back, and just because technology is that good nowadays, this is talking about the 2018 drop, which again was extremely lengthy from when the last prior 20% drop was, which was actually years. Minus 20% move, it took 65 days to get that minus 20%, which happened on Christmas Eve and December 26th, where we bottomed, minus 20.08%, and the move that came off of that. So as far as the judgment and discussion about us heading much further and much greater to the downside? Absolutely, yes, it is on the table, but it is not one that is hollering and screaming, and it never will holler and scream until there is an actual event that shows it. So you're looking here on your daily, very clean, overbought, 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 overbought. Looking here on your daily on the grandfather, RSI 14, you are again into overbought, the same as you were as we hit that Fibonacci cycle, spiral, 59.68 top. Got that tiny little dip, tiny little 200-point dip to that 57.6741, down to the 50-day moving average. And over here on your weekly, we are into overbought on the weekly. However, the Grandpa weekly is very far from being overbought as of now. Just something you want to be very well aware of when it comes down to that. So, where are we? Well, where we are is we had those two shitty, no movement green week or red weeks, minus 27 points, minus 36 points. And here we have our green week, and now we have a respectable monthly range for the month of June, 326 points. We have been gapping up every day since the holiday. We're gapping up again today, and we have had that minus 13-point fractional close there over on OPEX Friday, because all OPEX Fridays for quad OPEX close red. Minus 0.02 points, but you see your range is not doing anything spectacular. Got your retracements now. You got your minus 1% levels now, because everything's very easy to calculate if you throw it into a spreadsheet. 6,002 is your minus 3%, 5878 minus 5%, minus 10% being at 5568.91 as of right now. Come over onto your spreads and look, going for pay me. Come on, pay me. Well, ain't working. Getting $3 failed over on the ceasefire. Came out 24th. $3 worked next day. Then you had your $3 fail, your $4 fail over there on Thursday and Friday. So spreads, you want to be safe, wait. 61.87.68 was the top over there. We're looking at a 50-point range for today. 62.34 being your 1% level. Let the bitch get up into the 6200s, and then consider whether or not risking $4 to make $1 is a respectable trade to be done, or if you'd rather just sit it out because it's 4th of July week. Over on the QQQ, again, 2 red weeks in a row, which were absolute crap. An explosive week to the upside, as you had there on Friday, going to 549.99, and we are up above it as of now. Calculating, again, very simply, because spreadsheets allow you to make it simple. Minus 3% is 533, minus 5% is 522, minus 10% at 495, and minus 20%, which I wouldn't count on being at 440. Again, this is what we're looking at as of now, with nothing but green closes all throughout the course of the week, other than quad OPEX Friday coming back there on June the 20th. IWM, green week, fantastic, still down 3.34% year to date. So as you can see, it is a one. There it is. I knew I had it on there. It is a one index. One index. And that index, as I shared for you there on Friday, is not using the traditional weight. Google minus 16%, Apple minus 22%, Meta near the all-time highs, Tesla 33%, Amazon 9.7%, and NVIDIA right here at new all-time highs. So you've got Meta and NVIDIA, your heavy weight that's contributing to the QQQ, and all your other Mag 7 names other than Microsoft not having any effect whatsoever. So I bring you on to the Fibonacci spiral. This is the one coming off of the October 17, 2024 high. I am not a fan of it, but again, talks about June 7th being where a top or bottom would be placed. As you see, kind of starts to change a little bit from the synchronicity of high, low, high, low, high, low, high, low. You start getting a little bit further out. You start getting a little bit of a, okay, we're getting a pivot. That was on June the 7th. What happened on June the 7th? June the 7th, absolutely nothing. We wound up topping on June 11th, right at that 60.59.40, and getting a tiny little 110-point dip when we hit that 59.43 after the U.S. bombed Iran. Come on to your December 7th, which again, I'm not a big fan of. I'm not using it, but this is where I started gaining respect for it. It was looking at April 30th, April 30th, April 30th, low, high, low, high, low, high. April 30th brought us into April 30th, right in there to 5,700 on May the 2nd. Right on into May 2nd. Or could it be that 54.33? Right on time. A little bit of a dip off of that. Nah, I wouldn't look at. I'd prefer that 5,700. 2 days off, and then your little dip down there to 55.86 before we started making the rest of the move to the upside here. Bring us back in here. No, that's enough for that. And here we are. So July 13th is the next Fibonacci spiral date, which is also your CPI date, which is also your full moon date. Is it a low? Is it a high? I cannot answer that question other than the fact that it is definitely going to be a pivotal changing momentum area. July 13th, 2 weeks out, a little bit too far to go to continue this stagnation of an upward movement on the markets. June 25, new moon, just happened last week. The window, +3, -3. What that means is, as I shared at the very end of the video last weekend, that I was looking for a dip and a bounce, and that being our new moon high, 59.43, could very well be that dip. That bounce now at 61.87, with today being the final day of the new moon window. Questioning being, is this that we are putting in the quote-unquote top right now on June the 30th, and then we fall into that Fibonacci spiral date on July 13th? Very difficult question to answer. But anyway, I have for you here every single July going back to when Donald Trump first became president, just so you can have a look at what the first week of July, the week of July 4 is. Here, 2024, 33, 31, 38, 20, 16-point range. A lot of green closes there. Green year to date, +15%. Green on the month, from the very start. Year over year, +25%. Come over on to 2023. 2023 wasn't all that good. July 3, very first trading session of the month, green. And then you started red, red, red. 3 red closes in a row on 4th of July week. How un-American, but there again, Joe Biden was president back then, so what do you care? We were up 15% on the year at the time, up 16% year over year. And anyway, that's the point, right? You had a 14-point range on July 3, a 17-point range the day after July 4, and the range was complete and total shit for the entire month of July back then. Come over here onto 2022, and here, coming off of the big sell-off, which started in January, coming down here into July. Where was the bottom that placed? Bottom placed right there on July the 4th, 37.42. Double bottom to 37.43 from back here in June. Whatever, we were greater than -20% year to date. So quite obviously you were getting a bounce because of being -20% year to date. July 1, then July 5, because July 1 was a Friday, red week. July 5, green, 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 because again, you're -20% year to date. Come on into 2021, which I really don't think matters, but anyway, here's the data and here's the stats. Boom, boom, boom. Very small range. Weekly range, 43.56, 43.69, open and close. 2022, 2020. All right, 2020, coming off of the COVID bounce drop. Where are we? July 2, July 6, July 4 was on the weekend, so not really applicable. 27.41, 27.41. 2019, this is where it all started. The range was crap. July 8th, 10 points, 17 points, 17 points, 26 points, 26 points. And you come back into 2018 and it's even worse, where your range is actually okay over here, but again, July 2, July 3, J off on July 4. So the point being is, question whether or not you really, really, really want to apply yourself in any kind of aggressive manner moving into the course of this week being the 4th of July week, the 3 biggest weekends or weeks of the entire year in the United States. July 4, Thanksgiving, and Christmas. I'll be gone Wednesday, if not Thursday. But we'll see where we get on the open because, again, we have reached the upper limits and everything is working out quite well, other than the fact that you gotta respect the game because the playbook for this game has been laid out for better than 5 weeks. So chill out, relax, let it do its thing.